Well, welcome back to Finance Uncut. On today's episode, is Elon Musk the whale who bought silver? So last night we had a huge spike in the silver price. In fact, it went vertical. And the question that people were asking is, what was going on? Why is this happening? And who's behind it? And it had to be a big whale because there's someone that was buying about $460 million worth of silver on the Comex. And when we look at so this is the CME group, silver futures volume and open interest, you can see that, over 108,000 contracts were traded last night. And as I said, there had to be some big whale buying, and you can see the volume compared to what are usually the usual volume. So 108,000 contracts. That's over 500 million ounces. So that's half a year's annual mine production in one day traded. So quite incredible. And the question is, who is the big whale, and why did this big whale jump into the silver market? So I saw this tweet from Luke Groman where he said silver traded today like somebody big finally figured out that there will be not be it's Twitter, nearly enough physical silver to support a sustainable energy transition unless the price of silver is re-rated a lot higher. And Bob Coleman. Mike Coleman is a motorsport commentator back in the 80s and 90s here in Australia. Mike Coleman. Anyway, he said a very big silver buy in Europe this morning. This has also caused a short covering. The power issues there are causing smelter shutdowns, may get worse. So, has someone worked out that we've got an energy crisis, something that I've been talking a lot about on this channel? And it's going to cause issues with smelters and therefore supply of silver. Who needs silver? Could it be Elon Musk? Elon and Jamie Dimon having disagreements at the moment. Could he be trying to get at him? I don't know. Or does he just think that I need to get enough silver before this energy crisis hits smelters and therefore hits the supply of silver? Could that be the reason? And could he be the big whale? And Peter had this to say. Silver alert, March silver futures trade the most volume since November 10. There was a huge volume spike with over 50 million digital ounces traded in 15 minutes, triggering stop limits. Daily volume exceeded 100,000 contracts, as I said, 108,000, or half a billion silver ounces, 11.8 billion in liquidity. So, as I said, that's half a year's annual silver mine production right there. Now, Peter went on and said pressures are building, energy crisis, gold looking like it wants to run, silver is very cheap versus gold, versus commodities and other intermarket relationships. Great support in the low 20s, huge upside potential. Buy before the CNBC front page headlines of $50 to $100 plus silver. I 100% agree. I've been talking about the energy crisis on this channel for some time. And if we do see smelters go down and we see supply really be shrunk, demand has increased, and we'll have a look at that in a second. So this is setting up very, very nicely, and 2022 could very well be a very fun year for us silver investors. So let's quickly just check out this article on Kitco from Jim Wyckoff. Gold slightly down Tuesday, but silver sharply up, hits 7-week high. So Jim says March silver futures prices hit a 7-week high today and scored a bullish outside day up. The silver bulls and bears are back on a level overall near-term technical playing field. However, a 4-week-old uptrend is in place on the daily bar chart. Silver bulls' next upside price objective is closing prices above solid technical resistance at $25 an ounce. That'd be very nice, thank you. The next downside price objective for the bears is closing prices below solid support at the January low of $21.94. First resistance is seen at today's high of $23.68 and then $24. Next support is seen at $23 and then at today's low of $22.82. So with all that information that we just looked at, it reminded me of this article that I read just before Christmas from goldmoney.com that Alistair McLeod wrote. And it's entitled Gold and Silver Prospects for 2022. And as we finish this video, I just want to share a little bit of, in this. And I'll put a link in the description. You can read the whole article, which I recommend yourselves. But just with what's happening overnight in the silver market, just reminded me of this article that I read before Christmas. So when you scroll down to this part where it's entitled Silver appears to be badly mispriced. There are several factors that can only lead to this conclusion. According to the Silver Institute, physical supply in 2021 increased over a depressed 2020 by 8% to 1,056,000 ounces, but remains below the output for 2014-2016. Meanwhile, demand is up 15% this year at 1,033,000 ounces, leaving a marginal surplus of just 23 million ounces. The question obviously arises concerning demand patterns over the next few years at a time of accelerating investment in non-fossil fuel energy and electricity. For silver, increasing demand for electric vehicles and upgrading of mobile networks to 5G can be added to photovoltaic demand. Forecasting the balance of supply and demand is always difficult for silver because of substantial and unforeseen changes in usage. Remember photography. But it seems reasonable to assume that silver will be one of an elite group of beneficiaries from global environmental policies. And the article goes on to talk more about how ESG is going to affect miners and affect supply coming onto market as well. Then it goes on, but as a measure of total interest, physical silver demand is the tip of a far larger derivative iceberg. According to the BIS, outstanding forwards and swaps total roughly 3,750 million ounces, equivalent between bullion banks, and there are further liabilities between banks and their depositors with unallocated accounts. In addition, there are 715 million paper ounces in the regulated Comex silver contract, which with other regulated exchanges suggests that there are at least 4.5 million ounces of 4,500 million ounces, of added long positions in derivatives, which is 20 times estimated net physical investment demand for this year. And that ignores regulated and unregulated options. While it appears that industrial demand for silver is set to increase significantly, the pricing of silver in fiat currencies at 1/80th. So gold-silver ratio is also anomalous at a time of accelerating price inflation, more correctly understood as currency debasement. Mismanagement of monetary policies now virtually guarantees the death of fiat currencies, and the only salvation will be to replace or change them into credible gold substitutes, because most central banks have at least some gold in their reserves. So he's talking about the gold-silver ratio there. That being so, physical silver will reacquire a monetary role as supporting coinage. Its abundance in the earth relative to gold is said to be less than 10 times. Well, if you ask the miners, they're saying that it's 7 to 8 to 1. So yeah, and its historical relationship by metallic standards was approximately 15 to 1. It's interesting. I might do a video on that because there's actually a bit of history. If you guys want to know the history around the bimetallic standard and where we got these fixed ratios between gold and silver, I found a really awesome article I read over the Christmas break on the Mises Institute. I think it was by Ryan McCracken. Anyway, if you would like me to do a video on that, just leave some comments below, and yeah, I might do that. The demise of fiat currencies is likely to guide the gold-silver ratio towards these ratios, so the current ratio of 80 times is a blatant anomaly. In the absence of an immediate crisis for the fiat currency regime, changes to the way banks treat derivatives for balance sheet purposes are likely to lead to a contraction of open positions. The introduction of the net stable funding ratio under Basel III regulations is designed to curtail derivative risk generally. The withdrawal over time of banks from trading activities because of the NSFR will reduce liquidity in both over-the-counter and regulated derivatives, leading to greater price volatility. The contraction of paper silver outstanding is likely to translate diminishing paper supply into increasing physical demand. Anecdotal evidence is that order books for silver from the refiners currently run into the middle of 2022, with large industrial consumers scrambling to secure supplies. Any surge in monetary demand is therefore set to have a disproportionate effect on silver prices to the upside. And so that's the thing is, we can look at buying gold and silver because of inflation, a protection of inflation. We know inflation is bad and is likely to get worse. We now know, and I've been banging on about this, about the energy crisis, and we are going to have an energy crisis. What does that mean to our refiners and the supply of actual silver? The ESG movement on the miners, how's that going to impact the supply of silver? However, the demand is only going to increase both from an investment demand, because inflation is going to get worse, so there's going to be more people wanting silver and gold. When gold really gets up to a certain price, then people who want to protect from inflation won't be able to afford gold, so they'll move into silver, and so there'll be a lot of demand coming in from that point of view. But the industrial demand, so we are moving across to the electrification of the economy. We are moving to more electric vehicles, solar panels, you name it. So there is going to be more of a demand for silver. Just the technology side of things, silver is used in a lot of technology. So that's the way we're moving. So from an industrial demand, there's going to be more demand for silver. So the actual, in the physical market, the demand coming from both industrial and investment side versus the supply, due to ESG, due to the energy crisis we're likely to face, is a perfect setup. And I go back to Peter's tweet. It really is the perfect setup. We've got great support in the low 20s here for silver, and the upside could be huge. And when CNBC and Bloomberg and all the media start talking about it, it might not be quite too late, but silver's going to be in the 30s, $40 when they start talking about it, and a lot of people will be kicking themselves. But those of you on this channel, you guys know my thoughts on silver and my price targets on silver. But once again, I'll highlight that I measure gold and silver versus other assets, not so much in fiat currency. So, and who is this big whale? Could it be Elon Musk needing that silver from an industrial point of view, seeing the energy crisis, seeing what's going to happen with smelters? Whoever it is, they obviously know what's coming down the pipeline and want to get their hands on some silver. So anyway, guys, what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Anyway, guys, take care, and I'll see you again on another episode of Finance Uncut.